Okay, so in this video we will talk about time frames and what is the best time frame to use when it comes to forex trading. Okay, first of all, what are time frames? So to take an example, let's put the Euro USD, the Euro US dollar chart. Okay, let's put the daily chart and explain what is a time frame. So for example, if we take this red candle, the last one, the 25th of October, so this represents 1 day of price movement in the euro dollar chart. We are in the daily chart, so this one represents the price movement of 1 day. For example, this red candle opened right here at the top and closed all the way down here. So this is one candle that represents the price movement of 1 day. Same thing goes for the weekly, for example. So this one represents 1 week. This candle opened on the 20th of October, so it closes at the 27th, and this represents the price movement of 1 entire week. So the same thing goes for the 4 hours, same thing goes for the hourly, and so on and so forth. So what is price action? We would have to talk a little bit about price action before we get into what is the best time frame to use. So for example, if we take this red candle right here in the 4-hour chart, still on the euro US dollar. So this candle represents the price movement of 4 hours. What does this candle tell us? So as we can see, it's a very strong bearish candle. This means that when we see this candle on the chart, there's a high probability that the market will still go down or will keep heading down. And that's exactly what happened here, as we can see. So, for example, if we take this candle, this is called a doji candle, where the price of opening and price of close is very close to each other. Like the opening price and the closing price are very close. This shows indecision in the market, so it's always best not to enter when you see this candle, and it's best to wait a little bit to see where the market is heading. So in a nutshell, this is what price action is. We will not go into more details right now. We will do a separate video for price action, and we will go in depth into it in another video. So having this in mind, what is the best time frame? Should we choose longer time frames like the weekly or the daily, or should we go for shorter time frames like the 30 minutes or 15 minutes? Well, first of all, we have to see what are the advantages of going with longer time frames and what are the disadvantages of that. The same thing go with the shorter time frames. Okay. So when it comes to longer time frames like the weekly or the daily time frame, the signals are more solid, meaning that the candles that we see and the price action that we see and can analyze is more trustworthy to tell us a story about what the buyers and sellers are doing. At the same time, when you work with higher time frames like the weekly or the daily or even the H4, the 4-hour, you don't have to be stuck in front of the screen the whole time. You can open a trade and then check it every one and then. You can open a trade and then check it every 4 hours, check it every day, or even every week. But the downside of that is longer time frames require more capital. Your account needs to be of a bigger size in order to do what is called swing trading. So trading during the higher time frames is called swing trading, and it requires more capital. Now moving on to the shorter time frames like 1 hour or 30 minutes or 15 minutes. These are shorter time frames, and in general the signals here or the price action is less trustworthy and less reliable. And at the same time, it requires you to be in front of the screen for more time. Like for example, this price action right here on this red candle represents just 15 minutes of price movement. So you will have to check your chart more frequently basically, and it requires a higher degree of concentration. However, when you trade with the lower time frames, it doesn't require that much capital. So that's the plus. And this is what's called generally scalping, when you trade during the shorter time frames like 15 minutes or 5 minutes, or even some people trade the 1 minute chart. This is called scalping. But for example, here in the 1 minute chart, the signals are really not trustworthy. It's basically just like a lot of noise. So all of that being said, what is the best time frame to use? Personally, what I would use and what I am using right now and what I would recommend is always to choose between these three. Either the daily time frame, the 4-hour time frame, or the 1-hour time frame. These are the three best. Currently, I trade mostly in the 4-hour time frame because it provides a sweet spot between a trustworthy signal, a trustworthy price action, and at the same time, it doesn't require you to be in front of the screen the whole time. And also, you can start with more or less a moderate capital. It doesn't require you to start with a huge capital. So personally, I would go with the 4-hour, but you can also choose, in my opinion, between the daily and the 1-hour too, with the exception of gold. Because gold right here, you cannot enter, for example, on gold. Let's say if you have a $10,000 account, you would have an exception if you would trade gold, because right here, if we are trading the euro dollar, for example, it's perfectly acceptable to trade during the 4-hour time frame. However, when it comes to gold, you cannot trade in this time frame because gold simply requires more capital in order to trade comfortably with gold and to put your stop losses in a particular level, in an adequate level. So when it comes to gold, I would personally either choose the 1-hour time frame or the 30 minutes. Other than that, I would definitely always go for the 4-hour time frame, but as I said before, you can either also choose from the daily or the 1-hour. So this is basically, in my opinion, what is the best time frame to use, the 4-hour. Don't forget, guys, to hit the like button, also subscribe for the channel, and if you have any questions or any recommendations for what the next video should be, just leave it down in the comments below, and thanks for watching.